Good morning,
Okay.
good afternoon, good evening, wherever part of the world you're joining us from. We are broadcasting live from Douala, Cameroon. Today, we are having a very special guest from Zambia, and she is the Chief Operation Officer of Credit Cameroon. You are welcome to the program, Madam. Madam Kiali.
Thank you so much to a highly respected veteran journalist and a personal mentor, Mr. Bonimoa. Thank you so much. I'd like to reiterate, Kai Lovely, Chief Operations Officer and Interim Chief Marketing Officer for Credit Africa Limited, live from Lusaka, Zambia.
You're welcome, madam. You're welcome. So,
Thank
can
you.
you present what Credit Africa is all about for the million of viewers who are out there in the continent and beyond? What is Credit Africa?
Okay, Credit Africa is a community impact fintech startup. So we are not just a financial institution. We are not just another upcoming financial institution, but we are a community impact based kind of financial institution which is technologically driven. So, in the course of our conversation, I'm going to try to break down and split a couple of terminologies for the sake of accurate understanding, proper comprehension. So, we are the next phase, we are the next big thing in the finance industry, in the financial technological industry that is going to be happening in Africa. We've had 5 years of an amazing pilot phase in Douala, Cameroon, and we've had 11 years, that is 6 years plus the 5 years, making it a total of 11 years in rebranding and refining and polishing, dotting our I's and cutting our T's to make sure that we become that kind of financial institution that would actually be serving Africans in Africa and out of Africa. Credit Africa is that financial institution that is coming to boost or enforce the credibility of financial institutions and operations across Africa for Africans, in Africa, out of Africa, and being run by Africans. So it's more of a holistic pan-African financial technological package. In a nutshell, that's what Credit Africa is all about. As we will be going on in the conversation, I'm going to throw more light a little bit on products and services as I'll be making references to certain presentations. So that is Credit Africa, the next big
Yeah,
microfinance.
yeah. This conversation is purely technical, and I want you to really break it down for the common man because Credit Africa concerns the rural masses, and they need to know how they invest their money, the profit they get, accountability, and sustainability. So, first question now. Credit Africa talks about empowering millions through digital finance. Is that correct? But
Yes.
yes, when you look at the reality on ground, access remains low in rural areas because of the lack of the internet. How do you now reconcile access of these rural masses to digital financing?
Okay. I'm first of all going to start from the base. You see, the question you asked is a very sensitive question because when we are talking about digital finance, the first of all, we are looking at two things. Who are we giving digital finance to? And how are we giving digital finance? First of all, what is the holistic concept of digital finance? When somebody hears digital finance, what is the first thing that they're thinking of? The first thing they're thinking of is convenience. So I need to do this as seamlessly as possible. I literally do not need to leave my house or leave my office to go to a bank, to go to a financial institution for a very basic transaction, as basic as opening an account, as basic as doing savings, as basic as doing a withdrawal, as basic as getting a bank statement, the convenience of carrying out banking operations. Now, when the second thing, when somebody hears digital finance, the next thing they're looking at is the efficiency. How efficient is this operations model? Remember, this is not something I'm standing at the bank doing physically. So, what is the efficiency rate? Is the platform on which I am carrying out my operations? Is it easy to navigate? Is it easy to comprehend? The way it's been built, the way the features, the way they look like, is this something that is easy to access as a service? This is where you start hearing terminologies like SaaS, because now you need a technological tool, a digital technological tool to power your operations, and that is what? A software. So is this software, is the operations or the navigating system of this software as a service, is it efficient? Now, the third thing, when we are talking about digital finance, that comes to somebody's mind instantly, like in a click, they're looking at security. Now, when I'm standing in the bank and I'm doing whatever I'm doing in the bank or at the credit union or at the microfinance, whatever, whether a money transfer agency or whatever, there is that security because you're in that space alone. If I'm using the ATM, I'm in the ATM alone. If I'm trying to do a deposit, it's even though there is a queue, but there is a 1 meter distance. So I'm standing alone at the counter, and all of the information I'm putting in, it's just me seeing. Even the cashier who is sitting on the other side cannot see it unless I pass it over to them. That is an act communicating trust to the cashier. Now remember, I'm not entrusting my information to a cashier sitting there. I'm entrusting information to a financial institution being represented by the service provider in front of me at the time. For example, who is a cashier. So there is that security. But now I'm carrying out this operation from a place, I'm just trusting the fact that the SaaS I'm using to carry out my transaction is secure. How secure is it? What is happening at the back end? How robust is this security? Can hackers get to it? Can passwords be accessed? Can account codes be accessed? Can algorithms be hacked into? What is actually, how secure is this thing? So first of all, before bringing out the SaaS into the market to say this is open for everybody to use conveniently, it must have been tested over and over and over to be sure. Now, Mr. Moore, you raised a concern when we are talking what is Credit Africa's vision when we are looking at providing digital financial services to certain areas, particularly rural areas. I'm going to first of all take us to the point to, I'm going to go a little bit detailed. First of all, I'm going to talk about the challenges, the opportunities, the benefits of digital finance as a service. First of all, I'm going to talk about the challenges, which is going to include, one of the challenges is going to include the question you just asked, and then we are going to look at the opportunities. Now, what are the benefits? The fact that there is convenience, like I said, the fact that there is that efficiency, the fact that clients can actually enjoy a certain level of security when it comes to accessing their funds in real times, performing transactions, carrying out operations in real time. But what are the challenges, the real challenges across Africa? These things are these challenges are actually the pillars on which the blueprint for digital financial services or operations are actually built on. One of those blueprints we are looking at, which is a challenge, we are looking at infrastructure. And when I talk about infrastructure, digital infrastructure, we are talking about adequacy and appropriate infrastructure. What do we mean by adequacy? It means it's not like there is no digital infrastructure in Africa or across Africa. There is digital infrastructure, but it is limited, it is inadequate. Inadequate in the sense that it doesn't reach these rural regions like you're seeing. Now, when we're talking about appropriate, what do we mean by appropriate? There is an availability of digital infrastructure, which is really good, but maybe right now it cannot serve the community because it brings us to the next challenge, which is what? The digital digital financial education, the adequate technology, the human capital development. So there is Starlink, for example, that can solve the problem with the telecommunications networks. First of all, are the telecommunications networks present in the urban regions? Are they all actively and well represented in the rural areas? Are they fully functional in the rural areas? Are they perfectly functional? Not really perfectly, as in perfect, but are they fairly functional? Like, is it good? Is there stable network? Is there stable internet? Is there stable connectivity? So we are not looking at perfection, but we are looking at stability. Now, coming to that part, there is Starlink that is superb, that is wonderful. But how many rural areas have engineers or IT engineers that can set up Starlink and can manage it for these communities, for them to be able to perform these banking transactions? So one of the blueprints, which are actually a pillar to the digitization of MFIs across Africa. We are looking at a digital government, first of all, because we know when it comes to data governance, a lot of the data that is being collected or is being stored or is being processed, whatever, we must, as a financial institution, operate within within a legal framework that is in compliance with the host country, with the government of the host country, say for example, Cameroon or for example, Ghana. Now, for us to be able to solve this problem of stable, or first of all, available network, is there an available network? Stable connectivity, stable internet. There has to, first of all, be a government in place who has created an enabling environment in terms of policy and in terms of economic laws. You see, that says, okay, you can come in and you can do business. You can do business at this capacity. Another thing, the more wider my business is, the more I'm making money. Technically, in quotes, this is the layman's idea, but they don't see the amount that is going into maintenance and operations costs. And the government as an entity also is focusing when it comes to issuing taxes or levying taxes. The more your branches, oh, it means the more you're making money. But they are not seeing the side of where we're talking about community impact. Even if it's going to cost us as a company maybe 13% more, or 5% more, or 2% more than what we used to have on operational and operational costs, maybe we can just make that sacrifice to serve the community better. They don't look at this when they're levying taxes. So technically, there is a limited representation of networks. This needs to be solved. This part of the digital government, it needs to be solved because technically, digital finance in the end is going to be one of those platforms that is going to solve every other, or technically create an opportunity for every other aspect of economic functions and operations to go digital. We are looking at biometric IDs. So something about Credit Africa in countries like Cameroon, where there is already the functionality of biometric ID cards, it's going to make people opening the accounts, biometric account opening easy. But in countries now where there are no biometric IDs, there's going to be some limitations. That is just an example of the kind of digital government we are looking at. We are looking at digital businesses. I can't be running a digital financial institution if there are no digital clients, if there are no digital businesses at the restaurants around me, at the hotels around me, at the schools around me, at the motor mechanic workshops around me, at the normal, small shopkeepers, everyday vendors, beauty salons, beauty parlors, are they taking their businesses digital? Are their businesses going digital? Are they pushing? Are they engaging their clients into more e-payments? That's another thing we need to be looking at. What is the percentage of digital businesses in the rural areas as well? We are now, remember, the question you asked has to do with infrastructure. Is there available digital infrastructure that is going to power the
Okay,
operations
hold
of
on.
digital finance?
Hold on. Can the government, yes, can Credit Africa partner with the government to bring about and improve infrastructure that we are talking about? That's internet. Can you partner with the government, make them to bring more internet networks around the country?
Of course, of course. Credit Africa as a financial institution is not just coming in to solve financial problems. It's a little bit cold here. It's actually raining in Lusaka today, so I'm having a cold. Excuse me with that. Credit Africa
Okay.
as a financial
Okay, so
institution is not just coming to save financial problems. We are not just coming to make opening accounts easier. We are not just coming to make micro insurance services easier, micro savings, micro loans, micro credits. We are not just talking about financial operations. Where is Credit Africa going to, first of all? We are very, very committed first to financial literacy. As you asked, the rural area, the person I'm taking digital finance as a service to in the rural area, I first of all have to take the responsibility to do what? The human capital development. In what direction? In terms of financial literacy and in terms of technological innovation. We must educate and we must empower. That is a commitment. That is what we are looking at as a corporate social responsibility as a government. I'm sorry to make mention, not to run down other existing financial institutions. Financial literacy it doesn't seem to be an institutional responsibility. They are doing amazing, they are doing marvelous and amazing things in their corporate social response, in other social aspects as, CSRs. But when it comes to financial literacy, we are taking it as a responsibility. Talking about making the internet available in rural areas. It's very easy
question,
for the
I'm going
common
to
man
question
to say,
very
for
important.
example, MTN is not doing the job, Airtel is not doing the job, Zamtel is not doing the job, Orange is not doing the job. because they are not giving the best of services as we imagined. When you come with a tagline everywhere you go, people expect you to be everywhere they are. You have to meet them everywhere they are. But they don't understand that over time in running the businesses, or whatever business it is in terms of telecom, there are a lot of rectifications and ratifications when it comes to legal frameworks and fiscal policies that affect these businesses over time. And somehow it affects the vision. Things don't go as they envisioned initially. So, as a financial institution, we are not just coming in to say, okay, we are relying on the network that was on the network, or we are relying on the quality of what is available. We are coming in to say, okay, MTN, okay, Airtel, okay, Zamtel, what is the challenge? What is your challenge as a telecommunications company in making available this quality of network, telecommunications network, this quality of internet service, this quality of connectivity? How can we come in? How can we partner with you? Whatever challenges they put on the table and propose solutions they put on the table, we can take upon those as a corporate social responsibility to say, okay, we can invest, or we are coming in this direction to make this service better. Also, we can partner with the government. The government, most of the times, they are the ones providing the optic fiber service. And personally, I'm also, as much as as a government, whatever or whichever regime is, no matter how performant you are, you're open to criticism because there is always a hunger for more, especially when people have experienced better, or they understand that we have a capacity to access better. So the government, at the level of optic fibers, accepting that as a technological innovation, they've done a great job to first of all accept to say, okay, we want this kind of technology. They've made the effort when it comes to the kind of partnerships that you see African countries as in regional blocks coming into alliances to say, okay, we can have optic fiber cables run on underwater cables running from this region to this region across blocks like this, like this. Those are amazing alliances. Credit Africa, as a financial institution, can tap into those kind of partnerships, those kind of alliances to say, okay, we would like for you to extend your optic fibers to this capacity. They may not have the finances or the funds now. That is in it is in process. You see, the government will tell you it's in planning. This is a project we are looking at, maybe 2030, 2063. But what are you as a company doing to fast track the realization of this vision, or of this service, or of this um, project, for the interest of the community you want to serve? So you take one stone and you shoot two birds. Instead of Credit Africa waiting for 2030, waiting for 2063, waiting for 2035, what do? We partner with the government, we inject the necessary finance and the necessary technology. Some countries already have the engineers, other countries do not have those engineers. We can always make that available to say, this is the finance,
Okay,
this is
there
the
you go, there you
technical
go, there you go,
human
there you
resource,
go.
and then we move forward.
Let me come in, let me come in, let me come in. Very interesting. The upcoming question now is, I want you to go straight to the point because it's very important. We know that
Yes.
microfinance is, yes, microfinance is something that is, just hold the line, very, I mean, it is something that people talk about high interest rate. I mean, they are only out for profit and profit. You of Digital Africa, how do you blend profitability and the security of the client's savings? How do you blend that?
I'm so glad about this question. I think 2, 3 weeks ago, Credit Africa was actively represented by her founder at the Africa Finance Summit. And you have asked a question that was actually raised. One of the speakers made mention of it, and the reactions that were coming in the summit, they made mention of that. The first problem, whether microfinance, whether commercial bank, whether community credit unions, the first problem Africa is facing are high interest rates. And I'm yet, I don't know why it's like that. Maybe they think, or there is some fear due to some instability. We are talking now about regional instability. Due to the fear of regional instability, they're trying to recover the investment quick. They're trying to get back the investment quick. But time has shown, statistics have shown that Africa is virgin ground, is still virgin ground, highly untapped for financial institution kind of businesses. And that is why you see banks are opening up every day, microfinances are opening up every day, credit unions are opening up every day because it's a very lucrative industry. I don't know why they levy so much high interest rate on an economy that, first of all, is not even large. Africans are borrowing, African financial institutions are lending money to their fellow Africans who are clients with high interest rates. How do we ever break out of the poverty margin? That is a problem. We are not as big as the US economy. US financial institutions lend money to American institutions at 0.5%, at 1%, at 0.3%, 0.4%. When it comes to Africa, they are lending money at 6%, 8%, 12%. I'm a bit concerned because now the source of your capital as a business person is also going to determine how you're going to run business. And I'm going to fall back on people like the World Bank and the IMF. When governments come to you sourcing for loans, and you give them loans at 6%, 8%, 13%, some of these governments are requesting for this money. They need it to inject capital into government-backed financial institutions, for example, to keep them running, to boost operations and keep the wheels turning. And when they secure these loans at 6%, this is billions of dollars. They secure it at 6%, 13%, 8%, and they inject into the economy. It's only but normal that right to the lowest, right to the last beneficiary of these funds, of these capital needs, they are going to suffer high interest rates as well. This interest rate, right from the top, is being transferred all the way down to the bottom. And one of the speakers was saying that loans should be given out on a behavior-based approach. We are talking about business behavior, on a behavior-based approach and not an asset-based approach. Because when you give out loans on an asset-based approach, there are bound to be high interest rates. There is no cutting corners around it because you're also looking at the value of the asset. And you take advantage of the borrower as the lender. You put these high interest rates, and you know this person will not want to lose assets worth this in value. And they have to work 2 times, 3 times to meet up to pay those interest rates, and you're making 4 times, 5 times the profit. Now, those who don't even have these assets, but maybe they can access a collateral through a third party, maybe they can get a shorty, they are forced to suffer as well this Herculean, they carry this Herculean burden, this Herculean task of high interest rates. We as a financial institution, we are not just coming to sing the same rhetoric of saying that we are going to give affordable interest rates. We are not going to use the word affordable interest rates because those who cannot access loans on an asset-based approach are going to be caught up in that web of bearing the circular burden of high interest rates on loans. We are not giving loans with affordable interest rates. We are not giving out loans with low interest rates. Credit Africa is committed to empowering certain sectors, especially sectors MSMEs, to be precise, medium and small medium enterprises, which are highly impacted by youth and women. Credit Africa is committed at some point to giving out zero interest loans. This way, we are going to be able to have a first hand on experience to actually see what is happening in the market. Is it normal, natural market dynamics that is impeding the possibility of these loans being repaid? Or is it fiscal policies or maybe indirect economic functions that cannot be seen by the government that is affecting this? But at some point, a good number of sectors, economic sectors, are going to be financially powered by Credit Africa on
Okay,
zero.
Madam Chief Operating Officer, we have just 20 minutes left and we have a few questions. I want you just to go straight to the point. The next question is your collaboration with Faster Capital and through the Equity Pilot Initiative is being promoted as a breakthrough or revolutionary. But who holds the accountability when implementation fails? Is it Credit Africa or Faster Capital or local financial institutions that you digitize? Please, straight to the point. We just have 20 minutes left. Straight to the
I
point.
want to be very short about this. Credit Africa holds the responsibility for accountability and transparency. Our journey with Faster Capital has not just been revolutionary, it has been mind blowing. What Faster Capital, the decision Faster Capital took to get Credit Africa involved in their equity pilot program is not just about making financing available. It's actually going to be a demonstration of the efforts of Africa's global partners, Africa's global friends. You know, those institutions, that part of the global world that is actually committed to see Africa emerge as soon as possible. I mean, as rapid as yesterday, not even today. So when we are talking about transparency, when we are talking about accountability, Credit Africa has made sure to not just pick amazing talent in terms of in terms of productivity. Credit Africa has picked amazing talent with the help of collaborating partners like ProDevs, whose talents have gone through a robust integrity check that we are sure that this is the team that can deliver. So we are accountable. We are accountable to Faster Capital, and we are accountable to the local communities we are serving. And we are leaving the system as transparent as possible. How? Through partnerships, even with the government of the host communities. So the central banks, so they can check.
That one is clear. Just that one is clear. Yes, and across Africa, regulators are tightening rules on fintech and digital lending. How confident are you that Credit Africa's model can adapt to multiple national compliance framework without losing agility or investor confidence? Straight to the point, please. We have just about 15 more
Okay.
minutes.
In the
Straight to
first
the point.
place, why are they tightening regulations? First of all, let's go to the root cause. Why are they tightening regulations? They're tightening regulations because there has been an abuse. There has been an abuse of easy accessibility to finance. We have seen what is happening with smart loans across Africa. We have seen what is happening with digital loans across Africa. We've had the opportunity to talk with a couple of digital loan operators, and the feedback hasn't been very great. They've shared very sad and very touching stories with us. That is why we say, based on the digital infrastructure we are going to find already available, existing, and running in each of the 54 African countries we aspire to operate in. We are going to fit into the system, fit into the model, and we are going to run our operations on that. Now, based on the blueprints we have designed on how safer we can make some of these operations, we are more than ready to present these proposals to the government, to regional blocks, to other existing institutions to say we can do this way, we can do this way, we can do this way. Because right now, Credit Africa coming out of being born as a baby has been tried and tested. It has gone through the
Good one there. Yes,
yeah.
Madam Chief Executive, Chief Operation Officer, data protection too is a huge concern. I mean, data protection is a very huge concern. How are you protecting financial data of low-income families and micro entrepreneurs, people who might not even understand what digital privacy means? How are you protecting
Um,
them?
we are going to give an example. Sometimes, when you're bringing a service to people who don't understand what that service is, the first thing you're met back with is retribution. I'm going to take a very common example of our own very CCA in Cameroon. CCA is doing a very amazing job. One of their data protection tactics, which we really admire, is the fact that what? They have their own credit cards, not Visa cards or MasterCards. They have their own cards. Those cards those cards are designed to protect your cash flow usage at your individual level, within your country, within your region, for yourself, without it going out to the global space. Now, because we have people who cannot control their spending habits, we have people with poor financial discipline. They prefer using the Visa cards, the MasterCards, because they want easy usage when they are out of the African bloc. Now, Credit Africa, having understanding of that, when it comes to data protection, whether the data was gotten just from you filling a form, whether the data was gotten from you just from having your own from you using your own credit cards, or you filling a questionnaire or something, we are streaming the way data is being conserved in two different ways. I want to make this very practical. Everybody loves the cloud system of data protection, but the cloud system is not owned by you. And not only you has access to that cloud system, the person who builds that cloud system has access to it. They can always mine that data, they can always sell it, they can always do whatever. So we are having it as a responsibility to build our own servers. This
Good.
is
That
something
that
this
one
is
is
something
understood.
that is not very
That one
common.
is understood. That one is
Yes,
understood. It's clear. It's clear.
definitely will be our own servers. We cannot negotiate on that. we cannot we cannot flip a coin on that. So we definitely will. We must. Oh, the network. Network. Oh my God. I don't know what is happening at the other end in Douala, Cameroon, but it's a bit it's it's a bit of a network challenge. To everyone watching right now, to all of our viewers, we just want to say our prospective clients, we just want to say that digital finance is going to be happening across Africa in a different way, in a more respectable way, and not an exploitative way. It's going to be a win-win. As much as we intend to make money as a business, we are not making money going over the top at the expense of data security, data protection policies. We are very particular about this. And this is the part that brings us to transparency. When we say that we are ready to commit to working with government institutions like the central banks, the ministries of finance, all of these organs, is so that they can actually do a constant back-to-back check on our operations to see, are we just interested, are we just on the fast lane doing business in their countries with their citizens as our clients at the expense of their data protection, or are we in compliance with the laws of the host country that has been set? It's not just about at this point. You see, I did make mention of of hiring talent, building a team who has gone through a robust background check when it comes to integrity, because now it's coming from an individualistic standpoint. This is a civic responsibility when it comes to data protection. The team, the staff you have are supposed to understand. I cannot give out source codes. I cannot sell this kind of information out to whoever for whatever reason, because it is my responsibility as a financier to protect the finances that have been entrusted to me through the organization I work in. I have to protect the finances of my fellow citizens. So civic responsibility when it comes to business, it embodies a whole lot of things. Work ethics. If someone is not in compliance with work ethics, how are you handling this as an organization? We've seen, it is sad to say, but we must point out and we must admit, we've seen instances where financial institutions have actually had to sweep certain things under the rug or push certain things under the rug because they are trying to cover their image. And in the process of that, they go complacent into covering up certain malpractices. And it not only ends there. We've seen instances where these same institutions like this, they are benefiting off the ignorance of the clients. As we're saying, not everyone is financially literate. So it's a two-way thing. It's going to take, the consciousness of our individual. It's going to take the consciousness of our moral integrity. First of all, one of the organizational values of Credit Africa, besides it being transparent, beside the integrity, we have what we are looking at: adapt, we have extend, we have build, and we have extend. We cannot extend. We cannot even build anything. First of all, if we don't adapt to the existing infrastructure, we cannot build better if we don't first of all work with what is there, understand the challenges, and make it better. And we cannot extend beyond as beyond our current operations capacity in terms of regional landscape if this integrity is not there. So what we
Madam
sell in
COO,
Cameroon.
I beg of you the time. I'm telling you, the time factor. We still have a couple of questions remaining. Just take one minute for the remaining questions,
Yeah,
please. One minute, please. Okay, this question now, beyond investor presentation and press briefings, can you cite one measurable success story where Credit Africa transformed the financial life of a community, not just members on a balance sheet, where you have transformed the lives of a community? Please, 1 minute, 30 seconds, 1 minute, I beg of you. We have limited time.
amazing. I'm going to make references. In this case, I'm going to make reference. I'm going to make reference to two communities. Actually, it's a single community, but I'm going to break it out. I like the fact that you specified on saying not impact, not balance sheet impact, because those things can always be fabricated, they can always be duplicated, even though we have track records like that, but you cannot be presenting impact on a piece of paper track record. Now, first of all, the digital community, the digital financial community present on social media. I'm going to reference everyone watching this right now to go to Credit Africa page on Facebook and Credit Africa 54 page on Instagram and see what is happening there in terms of financial literacy. Credit Africa, I would boldly say right now, is the only financial institution in Africa who is currently using their social media sites as classrooms to give out financial literacy at the most basic level, as basic as casual conversations, all put up on that side. There is a bigger vision. That is just the beginning to what we intend doing when it comes to financial literacy as a company. There is a bigger vision on how that information will better be disseminated in the different African languages. On the 8th of March this year, 2025, we had a very amazing businesswoman from Nigeria as guest on our platform, an educator and academician. I mean, a monster businesswoman. And when she was sharing her experiences on how digital finance, if properly used, can empower businesses for women and make businesses for women grow and get better and a lot of things, the questions that came from most of the followers was a clear communication. It was an amazing KPI that we've hit the scoreline. People were watching, people were following, and the questions they were asking already tells us, as we can confidently tell you, that there are communities in Nigeria right now, in Benin right now, waiting for Credit Africa based on that.
Thank you. Please respect the time. Please. 1 minute now. Yes, tech scaling often feels tech scaling often kills local innovation. How do you expand across 10 countries without erasing local financial ecosystems or imposing a one-size-fits-all digital model? Please, 30 seconds, please.
Oh, we want to make it, first of all, very clear. We are not just, first of all, Credit Africa is not coming as a threat to wipe out or erase or kick out other already existing financial institutions out of business. Credit Africa is actually coming to power their operations, to strengthen their operations, to boost their existence in two ways: more capital injection and the accessibility we are making available and accessible to them, a very, very affordable. I use the word affordable because very, very few financial institutions in Africa are doing what they call core banking. We are making a very, very affordable core banking SaaS at their disposal to use as a work tool. So the existing local financial institutions, they can be rest
Good,
assured
good,
we are not
good,
coming to kick them out. We are coming to
good, good,
empower
good.
them.
Good, yes. And then the microfinance space is notorious for opaque funding and donor dependent.
I'm sorry, I
How,
didn't get that. I'm sorry, I
yes.
didn't get that.
I said the microfinance
Yes.
space is notorious for opaque funding
Yes.
and donor dependency. How transparent is Credit Africa about its capital structure, investor interest, and how much of the funding actually reaches end users?
Amazing. And this is on two fronts. On two fronts at the local level. We have said we are giving access through what? Through partnerships with the government organs available to work with us, to monitor data, to see if what we are doing is in compliance with the laws they have deemed okay, they have deemed good for their people, and if we are in line with that. Regarding this capital, which is given to us, is it actually creating the impact it is supposed to create? How does the person who gave this capital know that? Of course, accurate reporting. That is that is inevitable. That is non-questionable. Accurate reporting, and as also we are leaving the door open. It is not just our internal auditors who have to be doing the job. We are saying that you yourself, who gave us the capital, we are giving you the leverage to say you can have your own auditor on board to check to see what is going on, if we are in line, and then we can move forward. I think that is the most transparent way we can be. I mean, we can bring in a third party auditing firm that is not Credit Africa, that is not Faster Capitals, that is first we can unanimously agree to say we are picking a neutral auditor to get this job done, and you see if finances are going in the right direction,
We are
if it's
done. We
getting
are
to the
done.
right
We are
people. So
we are done. We are done there. We are done there. And then this one, artificial intelligence. Artificial intelligence is transforming fintech, but it also threatens human jobs in local microfinance institutions and cooperatives. Where does Credit Africa draw the line between automation and human inclusion?
this is a beautiful
Please, 30
part.
seconds.
This is a beautiful part. The first thing I must highlight is that the financial sector is one of those sectors that has not yet been hit hard by the dawn of AI. Human jobs in the financial industry are still present. But now these human jobs, they need digital skills to make them efficient, to make them better. If I'm going right now to my village in Banso, let's just say I'm going now to Jotin, I'm going now to Milim, I'm going now to Kikai. I'm not going to go there and start expecting some grandmother or some grandfather to just know how to navigate a software instantly. They just download it and do this and do that. No, there has to be agents on the ground who are going to do the job. From time to time, you see MTN and Orange and the telecommunications company, they still have agents on the ground training and educating people how to effectively use their mobile money. I mean, even right down to creating mobile money accounts, because you have people who cannot read. When we are talking inclusion, the disparity here is wide. We are talking inclusion between banked and unbanked, literate and illiterate, community development conscious and non-conscious and subconscious. So there are some there are some extremities, in the disparities when it comes to inclusion. So we are taking upon ourselves to say definitely we're going to train agents, not agents who are going to go out there doing marketing about Credit Africa. This is who we are as a company. These are our products. These are our services. Open an account with us today and access a loan. No, we are training agents to go into the field to do financial literacy. We have a whole curriculum set out. Financial literacy not to be done in the Queen's language, in excellent French or excellent Dutch. No, it's going to be done in Pidgin. It's going to be done in Fufube. It's going to be done in Hausa. It's going to be done in Swahili. It's going to be done in Bemba, in Nyanja, in Soksa. So we are committed to recruiting agents from
Okay,
all 52 African countries.
EOO, please, we are going down. We are going down to the end of our
Yes.
conversation, and then you are building what some call Africa First, fully digital cooperatives banking network. What personal leadership principles guide you as a chief operating officer, and what legacy do you hope to leave for posterity for Africa's financial ecosystem?
Wow. This one being thrown to me, being a personal question. I'm going to internalize this first of all. Um, being a corporate executive, having been a corporate executive from different financial industries, I've been faced with a lot of challenges when it comes to effective leadership on a team and the outside population, because there is this part of being humane, being considerate, that steps in. You know, Pro Lumumba says when you're in a position of leadership, it is a non-gender thing. As you get the praises, you should expect the criticism. And criticism oftentimes it comes from that wing of the population you're serving that really do not understand, first of all, where they currently are, what you have built, you've designed for them, and where you are taking them to. So, effective leadership has been a challenge for me over the years. But now, coming to Credit Africa, we have a team where the CEO, the founder, tells you before you sell out this service to this person, put yourself in that person's shoes. Consider that you're a financial illiterate. Consider that you are currently unbanked. Consider that you are either subconscious or completely unconscious of what is required of your community when it comes to community development. And one of the values that I've successfully adopted and established to be able to contribute effectively at this point when it comes to Credit Africa is discipline, self-discipline. And this self-discipline is about being truthful to one's self first. These things I am selling out to the people in terms of products and services, do I have it? What I'm telling the people I'm coming to deliver on Tuesday market, on Wednesday market, on Saturday market, is it ready? Is it prepared? Do I have the capacity? Do I have it? So, truth is, so somebody once said that the financial business as a business is built and it grows and it thrives based on trust, not the financial assets available. Trust. So, do I trust myself that what I am bringing out to my team as a team leader, as a corporate executive, as an operations officer, do I trust myself that what I'm bringing out is of good quality, is something I would like to be served with? So, it's truth, it's discipline. This self discipline, these two things.
Yes, and now we are going towards the end of our conversation, and this one is yes or no. With Credit Africa, is it cash or crypto?
Both,
Credit Africa, is it cash or crypto?
both,
Yes.
both.
Is it faster growth or sales? Okay. Is it faster growth or safer lending? Faster growth
No,
or safer lending?
safer financial
Yes.
practices. Safer, not safer, safest. The most, the most safe, the most decent practices, financial practices.
Okay. Is it artificial intelligence risk or artificial intelligence revolution?
When it comes to artificial intelligence, the risks are unknown because it's constantly in evolution. Right now, I will say there is already a revolution when it comes to the digital financial space. Credit
Good.
Africa
Is it
is
okay?
coming as a boost to that revolution. Talking about the
Yes.
risk, what we forecast, we have strong procedures or models to mitigate. But whatever
Yes.
is coming ahead that was not forecast, we definitely will overcome it.
Yes. And Credit Africa, is it a Pan-African dream or regional realism? Is it a Pan-African dream or regional realism?
It's a Pan African. It's not even a Pan African dream, and it's not a regional realism because we are not limiting it to a particular African region. This is a Pan African reality. This is Africa banking on her terms in Africa by Africans, whether in or out of Africa. So this is a Pan African realism in on the wheels. This is something happening. We are not dreaming it, and we are not limiting its operations to a particular block, African block. No, it's all
Okay,
54 African countries.
we conclude with this last important question. Can you carry us from your sojourn from Cameroon to Zambia, Lusaka, where you are now? Tell us that journey so that the young people out there watching you can also learn from your experience.
Okay. I so first of all, not just young people. I'm very particular about my gender. Women, young girls. The opportunities out there are endless, are limitless, but you must be ready to go through the fire of learning, through the fire of accepting that you know nothing about this, no matter how much you know it. I started in the financial industry as an intern at First Trust Bank, and I broke out of the financial industry into the hospitality industry as a marketing manager for a three-star hotel. My career started in hospitality like that. And little did I know as a marketing manager, a lot of tasks used to be thrown at me. I used to get very upset. I won't lie. I'm a marketing manager. Why am I cleaning the floor? I'm a marketing manager. Why am I doing dishes in the kitchen? I'm a marketing manager. Why
Am
am
I
I
still
dry
on
cleaning the
call?
nightclub? All of these things, I was actually being prepared as a senior executive. Now, not just as a marketing manager, but a manager, a hotel manager in making. And like God will have it, they say things, bad situations come up, but you have to make lemonade out of lemons. And when the Anglophone crisis, when the crisis hit the English speaking regions of Cameroon, you see, it was a very bad situation for me because my career hit the rocks. I built lemonade by doing what? I moved to the French speaking regions and, first of all, invested time in learning the industry language, French. At the time, I was perfecting my French skills. I thought I was going to use it only for the hospitality industry. It turns out French is the industry language for the financial industry, for the banking industry. I was training myself for something else, but getting ready for the big picture. Now, when I came across Credit Africa in 2019, I was volunteering in every way possible. I was juggling between my job as a hospitality consultant and a pioneer hotel manager and volunteering for Credit Africa at the same time, talking about product development, talking about the analytics of it, looking at the figures, behavioral patterns of the customers we had at the time for the pilot phase. I was heavily engaged as a volunteer, not necessarily getting paid. And then down the line, the boss says, no, you know what? You can't be putting in this much time without getting something. And now we ended up getting stipends. Some people will say, I can't do this job because I'm not getting paid. Beautiful enough for us, the visionaire understood the capacity or understood the magnitude of what he was building. We started getting stipends and it was a huge motivation. Before I knew it, I found myself doing consulting as a hospitality executive, as a hospitality expert, and doing consulting in finance in the hospitality industry. And that was how the financial career became a blend. So it's a continuous learning process. And at the end of it, I had to say, okay, hospitality, you've got to
Okay.
wait. I have to drive through with finance.
Okay.
So
Brilliant.
it has not been easy. It has not been easy. From that is 2016, 2017, that my career started in hospitality, and I'm driving through now as a financier. I could put it that way. So
Yes, Madam Chief Operating Officer for Credit Africa, it was a pleasure sharing your points of view. And I want to believe that the millions of Africans and even non-Africans got the message about Africa. We will
yeah.
be happy to get you next time about the same Credit Africa, maybe from a different perspective. Thank you for talking
Thank
to
you
me.
so much. Thank you so
Thank you
so
for
much,
talking to the
Boniwa.
bottom line.
You have no idea what this moment means for me. I watched you as a little girl in the 90s growing up, around the
Thank
world
you
this
very
week
much. Thank you
on
very much.
Cell
Thank you
TV
very much.
every
Thank you very
Sundays,
much.
and today 30